Hello and welcome to Nirmal Bang, ladies and gentlemen. I'm Hiral Dadia. We have with us Dr. Pawan Singh, MD at PTC India Financial, joining in. Welcome to the show, Mr. Singh, and always a pleasure to speak to you and get insights from you. Overall, we've been speaking over the year as to how things have been panning out. Taking into consideration the first quarter numbers that have come in for FY22, how different is it in terms of scenario, and is this what we had expected?
Yeah, so that is a good question, that how the quarter, the pattern which would emerge from this particular quarter going forward. So this particular quarter, we were able to, after some gap of several quarters, we were able to demonstrate the kind of profit our business model is capable of generating, and in fact, more than this. So that was one. So we had a PAT figure of 45.60 crores. So that is very much on the higher side compared to the corresponding period in the same quarter in the last year, where the profit was 26 crore, and the preceding quarter, which went by the last quarter of the previous year, we had made we had cleaned up our balance sheet, and we had made a provision of 106 crores. So that resulted in negative PAT of 53 crores. So against that, we have made a PAT of 45 crores. So that is a kind of we are fairly happy about it, and that we have started moving in the direction where my profit numbers would actually, demonstrate the potential the company has. And as I said, that this is only a beginning, and there are improvements likely to be seen as we go forward. Of course, last 1 year and plus, we have been working on the operating parameters, because the focus has been to build up a strong, sustainable business model with a lot of inherent strength. And that is why we have been focusing more on, things like asset quality. We have been focusing more on, our own monitoring mechanism, the system of early warning, prediction of, early stress symptom, taking appropriate action. These are the areas which we have focused on. And also we have tried to focus as to, what is my business model. We have not got swayed by, quarter to quarter numbers. So, to achieve something immediately in the next quarter and do something, knee-jerk reaction, that we have not done. The whole thing has been part of a very, very systematic plan. And we have been trying to build up a robust business model. And that is why we have focused to, improve our spreads. That has been one of the focus area. And the spread again has gone up to 3.31%, and NIM is close to 3.81%. We have been focusing on also bringing down our cost of funds, which have come down to 7.65. And going forward, we expect, more improvement to happen here, the cost of funds. Now, no number by itself has any significance unless you look at it in a perspective. So the point I would like to make is that apart from in a year's time, 110 basis point reduction in the cost of fund is what, closer to, cost of funds is what we have been able to achieve. And a lot of this reduction which has happened, we have been able to, part of it we have only passed on to the borrowers, and part of it has gone into the cushion or margin of our, the ROAs or spreads, where we have been able to get this advantage. So if you look at 1 year reduction, the reduction in the yield has been only, say, roughly 60 points, but the cost of funds have come down close to 110 basis points. So almost 50% we have been able to retain and get the benefit in our business model, and only 50% we have been able to, we have passed it on. As I also said that, my provision coverage ratio stands at 65%. And like I said in the previous quarter, whatever, close to 300 crore NPA, which I have in my book, which is whatever I have close to 300 crore, that also is, for that I have a resolution value which is available. And of course, we were hopeful that, we will be able to resolve it in this quarter. We were endeavoring to do that. Probably in the current quarter, we are now hoping, but I think maximum, again, few days here and there can happen. It's always, you can't really, because this has to go through a resolution process and all that. But hopefully by, next 2 months or maybe beginning of the next quarter, we should be able to have these 3 accounts also behind us. And in stage 3, we have 2 accounts which are now figuring, which constitutes a large number of our, stage 3 account. That is, one is Dhanu Wind, which we have in Andhra Pradesh, because Andhra payment. So 300 crore outstanding is there in our book, and about 161 crore is there on account of ILFS. So ILFS, yesterday only the final resolution has been had by NCLT, and the resolution plan, hopefully the NCLT will give an order in favor of that. The lenders are already working on the documentation, and hopefully we should be able to, get behind it in this quarter, the ILFS issue. And Dhanu Wind, what we are doing is there's a 2-pronged strategy. One is we have got ARCs to bid for it, and we have got offers close to book value. And similarly, we have also the resolution of payment of tariff is lying at the AP High Court, and there also the hearing, final hearing has happened. One more hearing will happen in a week's time, and both the routes, whichever is beneficial to us, whichever probably will pick up one of the routes. And this also, we are hoping that by end of this quarter, maximum first month of the next quarter, we should be able to get past stage 3, and cash inflows in both will start accruing to the company. So that is why I said that whatever efforts we have made, we have brought down our net NPA figure to a certain level. And that also, it's not the number which matters, again, it's the quality of assets. So I said that closer to the value of net NPA, we have another case where we have, like what I mentioned, we made close to 90 crore provisioning the last quarter of the previous year. And that was my, of the borrowers. And that for that, I already have a 90 crore offer, which of course is under consideration of the board. And so not only that I will be able to realize, in the stress asset, but this 90 crore write back is also expected. I would not say next quarter, but during the year, we should be able to get this 90 crore resolution also in place. So quality of asset, operational margins, and of course, the last 3 years, whatever lending we have done, 3-4 years, there are no slippages, not even, what we call SMA0, where it crosses few days of payment default. That is also not happened. Fortunately, in the economic sector also, the policy reforms have happened, which are favorable to lenders. So may it be NHI projects or transmission line projects or the sanitation, water, desalinization, which we have started doing. These are the areas where government has very good policy, even in e-mobility. FAME 2 model and all those are there. We have started doing e-mobility. We have done one case already, another case is under consideration. So we are also focusing that where we had large gestation projects like thermal projects, large hydro projects, where even in the road projects, we are taking up those projects where probably it is a brownfield and it's not a greenfield, like already financial closure has happened. Lender is getting replaced by another lender or something like that. There only we are entering and taking a call. So we are very cautious of asset quality, not only existing asset quality where we are going for all kinds of quick resolution, but Also, going forward, we are focusing on good quality assets, and that is reflected by the fact that we have in the current whatever lending we have done in last preceding 3 years, there have been no stresses. And of course, monitoring system, as I said, we have a very strong now early warning system, monitoring system. Yes.
Right. So overall, what's the quantum of resolution are we expecting in terms of stressed accounts if we have to give a particular number to it?
So I would break it in two parts. One is the NPA account and one is your stage 3 account. So in NPA account, we are hoping to close to roughly about, I can say that, you can say that roughly about 142 plus 81, that is 222. And one is, I said that has been fully provided for, but I'm going to get a write back of 90 crores. So 122 plus 310 crore is going to start giving me earning. As I said, in this quarter or in the first week of, that is my NPA account. There are stage 3 accounts which are not NPA account.
Correct.
So my stage 3 account, 2 accounts are there. That is I said that ILFS and the other one was your Talubit, which I said is 460 crores. So roughly, if you add this, close to 750 crores is what, in the next quarter or quarter after that, both stage 3 as well as this NP account will be carried out.
Right. And in terms of the asset quality as well, we have seen an improvement that's come in. So is this kind of asset quality sustainable? And if yes, are we expecting further improvement, and what are the levels we should be watching out for?
Yeah, so as I mentioned, that asset quality, current assets, what we have last 3 years we have lent, there is no asset quality challenge. Thanks to the kind of asset we have invested, where gestation period is low, where PPAs are already in place, or concession agreements are already in place, where land acquisition issues have been resolved. So this is what has been our learning experience, that in past, wherever these issues are open, they can lead to challenges. And also we have avoided doing long gestation period, which projects might take 4, 5, 6 years. And also we are avoiding entering into the pure greenfield stage.
Correct.
We enter at a stage where certain kind of already development has happened. So that is where as I said, that because of that, and of course our own internal monitoring mechanism, where I said that we have a rating which throws up any change in the variable of the appraisal. The rating model throws up the stresses, and we are able to take appropriate action. So that extent, yes, we are already in control of things, and we asset quality going forward. We find that our loan book would continue to be, once these the 4 or 5 assets which I mentioned behind us, we will be very, very clean balance sheet. We have already, because these are all resolution stage at a very advanced stage. So I can always say that these are, in fact, we still have a clean balance sheet, because these are all these are only waiting to get confirmed. That is the only point. But otherwise, we are very much on track, and we are very much in the direction where the asset quality will be a very, very strong asset quality. And that is why I come back to the point where I said that consolidation was our focus area, and asset quality and operational margins have been our focus area. And, from this quarter, we have started doing disbursement and sanction substantially. And perhaps this has been our first quarter where we have done, disbursement close to 1254 crore, perhaps one of the highest in the history of PTC Financial.
Right. And overall, right now, you mentioned about the green projects as well. And I think almost half of the loan book consists of renewable energy projects. To what percentage of the revenues do you think will come from renewable energy in the future? And secondly, you have been now incorporating wastewater treatment plants, e-mobility, e-vehicle manufacturing. So when do you see all of these projects to start contributing to the top line?
Yeah, so they are already contributing.
Mm-hmm.
Like sanitation, we have already done 2 projects. So disbursement has happened. Debt servicing has started. E-mobility also we have done 1 project. Disbursement, quite a bit of the loan amount has already happened. So we are the earning has started from there. In your area of HAM projects, highway and all that also we have 12% of our loan book is in road HAM projects. So that also earning has started. So then coming back to your first question on renewable energy, which is going to how it's pan out. So renewable energy continues to be 46% of our book. But of course, this will continue to be our, basically it will be our, it will remain to be our, what we say, backbone of our model, because this is an area which is going to grow, and this is an area where a lot of, policy clarity is also available in terms of must run. And that is why, despite COVID, we did not face any stress in our balance sheet. Many NBFC have faced problems, but we did not face any because they are on must run. So when the power demand also came down to 60%, all these plants were operating and the revenues were coming. So, and HAM projects also, because government support and all came, so there was no stress in the HAM projects also. Transmission line also, because they are also kind of based on availability and not demand related cash payments. So we were totally insulated from demand related cash payments.
Correct.
So it remains to be our backbone, and this is an area where globally, since we are moving towards a regime and everybody has realized post-COVID more so that it makes a lot of sense to be in area, business area which is closer to environment and society. So we are already there. So like others have started moving, but we realized that maybe 3 or 4 years back that this is what is going to be the story. So that will be our backbone, continue to be our backbone. But in as I said, green renewable, we are trying to, in fact, diversify within that area, and do, for example, there are 2-3 models of renewable. One is state PPA, then there is center NBB and SECI PPAs. So we are trying to do more NBB and SECI PPAs. And now, open access and captive power generation has also started, and many times many private equity funds in India are supporting third-party PPA kind of endeavor, where the counterparty would be a very, very strong buyer. For example, it could be Bosch, or it could be Siemens, or it could be Ultratech, Siemens, something like that, which is very strong. So AA or at least A+ or AAA kind of a counterparty. So that is trying to diversify, insulate ourselves only from 2-3 sources of payment, counterparty payment mechanism. And also part of our green strategy is to be desalinization and urban waste management and the water treatment plants and so on, which is again growing up in area. And e-mobility is very fast moving. The growth is, tremendous growth is happening. So e-mobility is another area where we would be very strongly pushing ourselves. And luckily, these are the areas where what has happened is that one of the priority areas for us is that we don't want to lend to anyone and everyone. So either it has to be a big, fairly big business group in-house, or we prefer lending to projects which are PE-backed, strong PE-backed projects, where they, they have a very strong corporate governance standards on use of funds, application of funds, and all that. So apart from sustainability and green, we also are very, very cautious of the fact that where we lend, the governance standards are very, very high.
Correct. Right. So overall, Mr. Singh, in terms of disbursements, if we see FY21 due to the pandemic, we clocked in around 2,700 odd crores. Whereas in this quarter itself, we've done little over 1,200 crores already, right? So do you think we will be able to do more than double or at least double of what we did in FY21, taking into consideration how the first quarter has panned out?
Yeah, we are targeting 4,500 crore of disbursement.
Okay.
And we are quite hopeful, optimistic, because the first quarter itself we have exceeded the target which was given to us. Second quarter also we are almost moving as per our targets. So we are quite hopeful. And third, fourth quarter normally you pick up. So last time also we did almost zero disbursement in the first quarter. 100 crore, that was negligible, and then another small amount in the second quarter. So third, fourth was where we did. So we'll do more than what we did in third, fourth, plus what we have done in first, we'll do a little more than that.
Right. Right. And very lastly, in between, PTC was evaluating divestments as well with best available options. Any update on that front?
Yeah, this question keeps on coming to me every time, and I have a standard answer. PTC is the best people to answer this. So as of now, to best of my knowledge, we don't have anything concrete to say about it, but it's best that PTC answer this.
Absolutely, absolutely. All right, Dr. Singh, thank you so much for speaking to us. Always a pleasure to speak to you. Good luck. Speak to you soon again and stay safe.
Thank you so much.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.